Greetings, this is Dr. Jeffrey Scott. This is my Market MRI Pro Market Update for March 31st, 2025. Well, a lot of things can be said about today. It's the end of March. What a brutal month. Frankly, a brutal quarter, first quarter for the U.S. stock market. March is known to be a tough market. April's supposed to be a lot better. Will we get that seasonality? April 2nd, 2 days from now, we expect to get a lot more information about what reciprocal tariffs are. You're continuing to hear the comments about hire everybody. Do you believe that? And then the question is, what was this market on Monday? I woke up, futures were down. I was in meetings all day. I looked at my futures and a couple of the long positions I had. It was like, well, what do you expect? You're going to be down if you have any long positions. I looked at 10 o'clock and things started to improve. And then I finished my first meeting at 12, and I was green. What an amazing day. But what does it mean? So I titled this Market Stage is a Massive 10 a.m. Reversal. Is it an oversold bounce or something more? Again, my name is Jeffrey Scott, marketmripro@gmail.com. As always, these rants and raves are unscripted, unprepared, meaning I don't sit in front of the mirror and practice them. It's just raw, my thoughts of the market, and they're for educational purposes only. I've been trading the markets, whether it's futures, not really Forex, stocks, options, since the early 90s. I've got my own way of trading, and I would say I'm a swing to position trader. Again, this is for educational purposes only. Anything I talk about should be taken in the spirit of education, not investment advice. I can say about my trading, I am a top-down trader, and these videos are so I can pay homage to those like Ian Woodward, who taught me so much about how to be a top-down trader and how to apply the rules. Trading involves risk, and you are solely responsible for any decisions you make. I may own or intend to buy or sell, go long, short, any stock mentioned in this report. Trading stocks and options should be considered risky and should consult with your financial advisor before making trades. And as the folks that follow me know, I have tools and lots of platforms. I will probably have time in the morning or later this evening to do my wealth charts video. I do use different platforms, and what I've decided to do is to kind of do the wealth charts on the days that I can do it in stocksanddocs.com, and then most other days it'll be a hodgepodge of the various platforms that I support, or my app that I had Praveen built for the two of us called Market MRI Pro. If you like what I do, come live. It'll be the best experience you've ever had. Whether it settles out at $300 or $400, I'll leave that to Greg Mills. It's not my meeting. I'm not doing it to get rich. I'm doing it to pay back. This used to be one of my peers, George Lee, who is no longer with us, and we decided to keep the meeting going in his honor. And George was famous for having the lowest cost meetings, and we've tried to keep that. So Greg Mills at gam72054@aol.com is the contact person. I'll be announcing shortly who the additional speakers are. And let's see. If you want to keep my information even closer, join my top-down trader group. I will share with you on request through that vehicle some of the training programs that I've done. Also give you introduction to the Market MRI Pro launch, and you'll get first notice whenever I put anything up on the web. I give you a discount on any purchases, and it's a great vehicle to communicate with me and other traders, whether it's about trading or any of the platforms. And what do we have on Tuesday? Tuesday we got Kate Schiller, consumer confidence, which is coming down. A miss to the downside won't be pretty, and as consumers are more concerned about inflation, that wouldn't be a surprise. And actually, I take that back and I apologize. That is last week's, and I forgot this is Monday. So let me pause this and let me update that. I wasn't kidding about this being unscripted. So sometimes things like that happen. Yes, a much busier day Tuesday on April 1st. We have the Fed, Richmond Fed president. We got March, we got March final PMI for manufacturing, construction spending, the ISM, job openings, and auto sales. So a lot of stuff there that might give us insight on the economy. Plus, it's always good to hear what the Fed thinks. If we look at earnings, we're getting near the end of earnings from this cycle. There were a number of earnings on Monday evening, and PVH is probably the big one, up big, and then LPRO is down big. PVH up 15.8 and LPRO down 12.3 on results and a change in their CEO. Never a good thing. So earnings on Tuesday, not so much. Obviously, the big event really is going to be Wednesday when we're going to figure out what those reciprocal tariffs are. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. As I have mentioned multiple times, I have raised cash. I still have some long positions. I still have some very long-term stuff that I protect. For example, puts on NVIDIA, which I mentioned, 2 months ago or a month ago when I put them on, when NVIDIA was in the 140 range, 135, 140. Just because it was too much in my portfolio to risk a 30 or 40% drawdown, which we've seen, and it may continue to go down. So I still have some longs, so I still care about the market going up, but I have a lot more cash than I would normally have. On to the charts, let's take a look at what I think is going on. So for those who haven't been here, this is the Market MRI Pro tool that I built just to support my style of trading. I built, meaning Praveen built it under my guidance, a brilliant programmer. If you can see the one-day change, and boy, is this a change from earlier. 10 a.m. everything was negative, and negative with significantly. Market finished up 1% on the diamonds. The spider 0.67. The VIX volatility finished at the lower of the range, was much higher during the session. It was up 7.57% at one point, finished up 0.1. The Qs finished flat, and the Russell was down 0.5%. Again, except for the VIX, which you want to finish in the low of the range, most of the things, even the Russell, finished in the upper part of their range. Over here, we look at the new high, new lows of the NYSE and the NASDAQ at various time frames, and you could see they continue to be negative. Over here, we can look at one-day performance on the ETFs, and this is interesting and perhaps should temper your enthusiasm about what we saw. If the market was truly rebounding and the stocks, the leading growth stocks, which is the type of investor I look for, I am, then you'd expect technology and discretionary to be at the top. But the strongest groups were staples, financials, utilities. That's still relatively defensive. And you see down at the bottom, tech and discretionary. Yes, they were still up. Yes, they were extremely high in their daily range. But they were laggards. And I would have expected to see improvement if the market's improving in those two sectors. From a theme perspective, we have a lot of positive themes. I've ranked them from one-day change. Home construction, gold miners continue to be strong. Retail, oil exploration, telemedicine, transports, e-commerce. So what I've done here is created a bunch of themes, and you can look on a daily basis how those themes are doing. And it's just something intraday that's helpful. Over here is a really magic tool. It looks at 3 indices. My buddy Sagar with SuperiorProfit.co has built out this in the S&P 1500, and you can look at what percentage of sectors are up, what percent of industry groups are up, and what percent of stocks are up at a given point, updating real time during the day. And I think that's incredibly powerful. The gray bar shows you where we were a day ago. And you could see in the market on the S&P 1500 today, all but one of the sectors were up. This is the 1500. This is the 500. 68% of the industries were up, and 61% of the stocks were up. So strong day. Yeah, it's not too bad. And great. Only 61% of the stocks were up. Here is the NASDAQ. Only 31% of the stocks were up, and a lot less of the industry groups and the sectors. And somewhere in the middle was the NYSE, where 75% of the sectors were up, 60% of the industry groups, and only 47% of the stocks. So, yeah, the larger 1,500 stocks in the market did well, 61% up. But you look at the broader NASDAQ, 31% up, and the broader NYSE, only 47. So that is not nearly a strong day as it felt. So this updates, all of these panels will update real time, but I don't push them in streaming because I don't live in this every day, every hour. And what I wanted to do was if I can hit refresh, and before I could say refresh again, it updates. Why do I have to have it streaming? So that's what we designed this to do. So you can hit refresh and, like I said, in about the time it takes to say refresh, it will refresh the results. The next thing I have is a built-in timing model. Those who follow me know that I have developed an indicator, a trending indicator called the Bongo. This is the WMA. It's 30 period. It's weekly because this is a weekly chart. That comes from some of the stuff I read from Stan Weinstein. And I took the combination of the trending indicator and whether we're above and below that WMA, and I created a market timing system. So you could see here from November of 23 until just recently, the S&P was in a buy. Well, on the weekly charts, we're still in a sell. On the Qs, a sell. On the diamonds, a sell. And the Russell, a sell. So all you got to do is look at the chart at the weekly time frame, and it's pretty clear that we are in a downtrend in each of these indexes when we look at the weekly time frame. This green line represents the 13-week new high, new low, and you can see we're creeping down, especially on the Qs and the diamonds at an area you anticipate a reversal. If I go to the daily, I was hoping that we would have big enough move in the market on Monday that we might see a change in the daily, but unfortunately we didn't. You could see the last 2 days. So we flipped to an uptrend, and I was thinking that this was a retracement in a downtrend, and lo and behold, what happened is we went back down, and we're now in a sell signal on all of these. So yes, today was fabulous. It was great to see my portfolio go green and not red on what's left in the market. But did it change anything? I don't know. I don't think so. Yes, the spider here, whoops, let me go back to that. I don't need that far out. Shows a beautiful gap down, reversal, and close, and actually being up on the session. All right. You look at the Qs, open down, traded lower, bottoming tails on both of them, and closed at the high of the session. It's open, that means it closed at the high, but it was flat. It wasn't a positive day. The Russell, open lower because it's an open candle, big bottoming tail, ran up, closed below the high of the session. It was a negative day. And then the diamonds had a pretty impressive candle here, but again, opening lower, trading off the highs, but not taking out the high of the previous session. So this could certainly be the start of something new. Are we going to run up until the 50 and fail? And we'll look at this. Let's go into the, we'll get to indice charts in a minute. Yeah, let's look at the indice charts. All right, what you see here are the daily indexes that I like to watch: Spider, Qs, Diamonds, Russell, VIX, and Dollar. Right now, the program's limited daily, weekly, and monthly. Days like today, I want to put in intraday futures or intraday ETFs, and just to look at in TradeStation. These red lines here with the triangle, those from a guy named Roy Kelly, is a cycle low indicator, and you start to see them firing across all the futures at the same time. You pay attention. This is a 30-minute chart. And then you can see these bottoming tails at this tick here coming into the market. So hammers coming in. And then what I really liked when I saw this was these arrows are John Person's indicators, but the headwinds and the stretches that come in with Sagar Superior Profit.co suggesting that maybe this was something meaningful. Again, the constellation of the Roy Kelly cycle low, the hammer, and the signals here. And that would have given a good signal, perhaps, that it was something to consider getting back into the market. So, I'll just see if that was done yet. So, what do we see on the dailies? We could see um, open candles for all of them, except the four that I monitor here. And that means the market's open lower, closed higher. You could see that the spider was up 0.67. We can see that the Qs were flat. Didn't turn positive, but boy, big reversal. The diamonds were up the most, over 1%. The Russell, like the Qs, got close but didn't get back, still down 0.75, did not get back to break even on the Russell. The VIX, I mean, was this the peak? Again, when the VIX is high, it's time to buy, but we have a reversal and closing lower than it opened. And the dollar, yeah, it's kind of consolidating here. So I look at this and what do I say? Gee, we didn't even get back into the flag on the spider. We go up higher, we may have resistance at this line. We've got the 200 right here. We got the 17 overhead. We got the 50 here. It's going to take a lot of proof for me to believe this is more than a dead cat bounce on an oversold condition. Same thing here. We haven't even gotten back into the flag area. Again, the same thing in here. We probably pierced the flag, but we probably run up into the range of this yellow dot, and I think we reverse again. The Russell shows you what happens. You can retrace and reverse. And the VIX wasn't that impressive. So if I was a betting person, we're not done yet. Now, we got Fed head on Tuesday, and we've got the tariffs. Will we sell the news, or will we, and then, or will we buy the news? Excuse me, will we sell the rumor and buy the news? Maybe that's when we get the big reversal. But I don't think we're done yet. But I have to have my eyes open, my mind open, and I'm not going to tell the market what to do. It's going to tell me what to do. The commodities, you'll see just what a boom. Gold, all-time closing high. Silver reversed intraday. And we mentioned over the weekend that on Friday where gold was up, silver actually had reversed. Just a little retracement. Silver has been powerful. A breakout on oil. Maybe it's the talk about us bombing Iran or something along those lines. But a major move and a breakout above the 50. I think oil is going higher. Natural gas broke out above the 17. It looks like it's going higher. And what's down, which is good, is both the 10-year and the 30-year were down. So dollar not doing much, 10-year and 30-year down. Market super oversold going into the session. Is it any more than an oversold bounce? The buckets give you a sense that even after the move we had, that the market's still more oversold than overbought. We now have 12%, which is a one bucket improvement, a percent of stocks in the NYSE below their bands. We've got 12% in the S&P 1500. I've got 21% of the stocks in the NASDAQ are still below their Bollinger Bands, and that got worse in the market, and as is 21% in the Russell 2000. So we're still at an area that we're way oversold. The more we shift to the right, which I like to refer as stocks move into the higher parts of their Bollinger Bands, we get to an overbought when we start to pile in above the Bollinger Bands, but it's 2%, 3%, it's nothing. So the buckets tell me, hey, we're still pretty oversold. This market didn't really change much that we saw the big run on Monday. And the market breadth, you could see the bottoming tail on the NYSE daily getting back above the 200. That's a bullish idea to me. And you could see over here on the NASDAQ, let me just widen it, make it a little bit bigger. You can see the NASDAQ, did not get back. This is the composite to break even, although it closed above, way above where it opened with a bit of a bottoming tail. Down here we have regular volume, nothing impressive. You could look over here and you could see stocks above the 20-day on green, the 50-day in white, the 200-day in red. And you could see that the NASDAQ was much more oversold here and in the bounce area. And then down here we have new high, new lows, we have advanced decliners, and we have up-down volume. And you could see that the only thing green across these two was the up-down volume was greater on the NYSE. Everything was still red on the NASDAQ. How strong of a day was it? Not too strong. So I think this was an oversold bounce and not a whole lot more. I hope I'm proven wrong. If you look at where the strength is, you look at what's pointing up here, and Staples still had some strength in the market on Monday. Staples in the defensive utilities, real estate, strong, healthcare, strong. What's weak has been discretionary and technology, and they were laggards in the market. So, I've just spent a long time, 20 minutes, but I teach, I don't just go through the market. And, the markets don't look that much better than they did over the weekend. I still think there's high risk. I still think there's high risk. I think that's stink. And my guess is we rally a little bit more potentially, but I don't think this is the end of the pullback, although April is a lot better month for the markets than March. And then lastly, we're going to look at the JAS layout, and then I'm going to give some really exciting news. The JAS layout is my trading system. It has an extension, my trending indicators, regular moving averages, a relative strength indicator here, just showing that this is a stock with, compared to the spider, very high relative strength. We have regular volume here, my dots, which look at everything from a triple EMA moving average crossover system to another type of a trading system I call the CPR. Then 4 dots, which are gaps, volume, breakouts, and momentum. We have squeezes, the PSAR, which is nothing different than the one in every program. I just like to see what it's doing. And then single candle reversal is either called a red candle high or green candle low. I have my own way of doing relative strength, which looks at the relative strength of an instrument versus the spider and compare it to a moving average. And when it breaks above the moving average, like it did here, and you get the dots and the volume, that's like my number one time to buy. And OBV on the bottom, also something that moved at this period of time. Over here are scans that look for the number of up dots, down dots, the trending indicator daily and weekly. If it's red, it's bearish. If it's green, or it's bullish. And the number is how many days or weeks. 3 short, intermediate, and longer term momentum systems. Relative volume, what had the greatest volume versus normal on a stock, during normal for that stock. And you can see stocks had huge relative volume or here, and these would be things, could be up or down. Volume can go either way. Some of these are pretty cheap, but not all of them. This has been a crazy stock this year, SEZL. And you could see this massive run up in this financial services stock. And this is a stock that ran up from a base of 100 in August, 60 to 100. It ran up to almost 500. And it's now back to 200. Not a ride you want to be taking. So I'm a top-down guy, so I can go into, let me back up a second. My list here, which is 3462 stocks, varies from week to week. It's the components of the NASDAQ, the NYSE, and the Amex, and then it's filtered for $1 minimum and 100,000 shares, just to skinny it down a little bit. And then I assign everything into an industry group or sector, as you can see here in my searching tool. Everything has, or not everything, but most things will have a sector, industry group, market cap, so we can scan by any of those things there. So then I can look at top down, so they're now loaded into their sectors and their industry groups. I could look at sector performance and see that Staples was in the lead, and utilities. If I click those two, this brings up all the industry groups from those two. Let's just rank this by 2-day momentum. And let's look at the top 5 groups, 1, 2, 3, 4, 5. So this is pure top down. I picked my favorite sectors. I picked the leading industry groups from those sectors. And let's set the ranking here also by that 2-day. And what should come to the top are the best stocks. So Costco, over the weekend, we talked about this. Boy, it's at a time wouldn't you like to buy it off the 200? I still don't love the valuation. I don't understand the valuation. But look at what happened with Costco here. Big topping tail. That bothers me. But if you took out that tail and I saw this candle with good volume, a breakout in a momentum dot, relative strength crossing over, I'd probably be looking at Costco in the market on Tuesday if the market holds up. Philip Morris, I'm a cancer doc. I can't buy a tobacco stock. But boy, does this thing look good, and it pays a dividend, I believe. Let's just look at the fundamentals here, and you can see it pays a 4.38% dividend, and the last earnings were February 6th, and they had a surprise to the upside on both earnings and revenue. Oh, my tools in one place. That's what I want. Next thing is Sprouts Farmers Market. So these are staples. Is this one setting up to run? And it's kind of interesting that if you just put a lean reversion curve, a mean reversion curve, it's probably sitting right at the curve right here. It had a new, we call the CPR signal, which is one of my trading systems, a breakout and momentum. The relative strength looks good, as does the OBV. Got a couple utilities that we looked at over the weekend. Duke we did not look at, but breaking out to recent highs. AEP was one of the ones that I liked. You see I had drawn on it that if I liked it on Friday because it broke out of the trend line, it gapped up. Walmart, no surprise. If Costco is going up, Walmart has exact same looking candle without that topping business. That might be one interesting to look at, especially if the market turns around. Ali, a discount retailer, talked about this last week, bought it on the breakout. It continued to go higher. So I love top-down trading, and here in like 3 steps, the top stocks in the market come up. You can rank them any way you want to rank them. I could have ranked them on percent change. I want to look at more than one day. Another way to do it is just look at who's got the most dots. Here's Walmart, Sprouts. EXC is another utility, big breakout here. I think, interesting market, surprisingly strong, but strong in the things that I don't want to be leaders. Now, you might be looking at this and going, but Jeff, you just told us in the S&P 1500, all the sectors except one were positive. Why do you see so much red? Because I got 3,400 stocks. I'm not looking at 1,500 stocks. And the broader market was weak. That's what it tells me. Another way of looking at the markets is what we call bottoms up. So rather than I could rank them, look at percent, I built some scans. Let me look at my favorite scan. I want stocks with 500,000 shares, price greater than 5, and I'm looking for a 2-day momentum up. And I hit OK, and 3 things pop up. Boy, all of them, 2 of the 3 we looked at over the weekend. They're all utilities. Duke, breaking out here. And the exciting thing here is I can pick the closing high or the intraday high. I just go right here. That was the prior high, and we broke out above it. That's interesting. I like that. AEP, you can see I was looking at this over the weekend. A breakout from a flag, one of my favorite things to take. And here was another one that kind of looks just like DUK. Now, it's great to have nice setups, and we took out a 1, 2, 3 top, and that's a pretty strong setup as well. It's nice to have 3 stocks with one of my favorite buy-sell signals, but not when they're utilities. Now, if this market was to turn around, then we might be looking at bottom fishing, and I might want to look at stocks that have been beaten up. And I might look at one of my early buy signals. So here is OMC. Is it beaten up? Absolutely. And what I looked for is this, you can hardly see a red one on Friday And the fact there's nothing there tells me we're transitioning to the green line, which means my early signal turned positive in the market on Monday. Relative strength and OBV look good. The CPR fired. We got volume breakout momentum. I don't normally buy things that are destroyed. This one's destroyed, but it's got a lot of interesting signals. EIX is a utility that's actually giving me the same signals. So the bottom fishing just pulled up things that have been beaten up. So I have ways of identifying pullbacks in an uptrend. It's got to do with a pattern on the bongos. So when I look at these, they should have been an uptrend and have pulled back at least over some time frame. So let's look at Cove. I figured I'd pick something that's dead. Let's pick something that's not $1. Let's look at Intuit. And uptrend, pullback, and running again. Roper, electronics, super high price stock. I remember when this was less than $100. Uptrend, pullback, and moving higher. So I'm able to identify patterns and scan for them, and then I could take that pattern and I could look at my various signals that occur. So utilities and staples are not the place where I think shows strong market, but I just wanted to show you that little walk through top down and bottoms up. And now the bonus session, okay? If this market is at a low and we're reversing here, you're going to hear me talking about the box stocks. The box stocks represent something that Ian Woodward taught about at market bottoms. The stocks that come out first are characterized by earnings and sales growth. And that you can create, and over the weekend I'll go into more detail if the market continues to move up, you can create a list of box stocks. So what I did is I took all the stocks. This is HGSI, great program, 11,291 stocks. This program was built to be the words and the wisdom of Ian in a box. And I go here and I want to limit how many stocks I'm looking at. So I type in box and I want ERG 240 filter. ERG is EPS rank plus relative strength rank plus group rank, and I want it at least 240, assuming 80, 80, and 80. Last close above 2 and 250,000 shares. Now I might, in my old age, I don't buy stocks with that few shares. Let's just change that to 500,000. Let's hit OK. And that 11,291 go to 237. Here are the box numbers. And what I'm going to do now is going to open up the slices, and it's going to put the boxes into various slices. And the NA are all the stocks in this list that didn't have a box. So for example, box 1 are stocks who have a 100% annual and quarterly growth rate. They double in one year. And it goes down from there in growth rate from a quarterly and an annually perspective. Box 7 stocks, which is one of my favorites, are stocks that have had a turn, that have just had a reversal. Well, you look at APP, and this is probably one of the biggest reversals of any stock I can show you. I don't know if it'll open up the chart from here, but the bottom line is I built, here it is, and let's change that to a daily chart. This is going way long tonight. My wife's going to kill me because she can't sleep when I'm talking so loud. But this is a stock. Yeah, I got a lot going. I don't know why it's taken so long, but basically you can see the big pullback and the reversal. Now, I'm not saying this is going higher, but it's got the earnings to support it, and you could see here earnings per share growth rate in the next quarter is 116%. Once I've done that, I can click this box and I could create webinar boxes, and we're going to call it 4.1. Oops, and yes, I can't type. 4.01.2025 pre-open. I'm going to hit OK, and it's now going to create for me in my tool here in user groups a directory of those box stocks. Um, Somewhere in here, here webinar boxes, and it shows you which stocks are box one and so on and so forth. So I will be tracking that as we go forward. At the top of the market, I create a leaders index of extended stocks, knowing that when they roll over, the market follows. It certainly worked this time. At the bottom of the market, I create a list of high earning stocks that usually lead if the market's going higher. So on that note, I hope I didn't waste your time. I hope you don't mind putting up with my ranting and raving. I appreciate you being here, and we'll see you tomorrow.